Hello and welcome to another update video about Vulcan Forged, PYR. As the markets are slow today, thought I'll I'll cover this request because apparently this is getting hyped a little bit due to the issues around the Gala ecosystem, which you probably have heard about. Now, again, in my opinion, this chart is rather bearish, or is just focused on sideways. I mean, it hasn't moved really to the upside for a long time. And it also initially in 2021 has not rallied in 5 waves. If you know about market structure and Elliott waves, then you will know that a chart that only moved in 3 waves leaves a lot of uncertainty. We have 3 waves up and 3 waves down so far. I see nothing bullish, just sideways, so it's not a trending chart. It also has been moving since May 22 in a range. So again, it's not trending, okay? Now, a rally like that is nothing unusual on the Vulcan Forged chart. As you can see here, it happened in July 22, came down again. Yeah, it happened in December 22, came down again. And it's just moving sideways, basically with lower highs and higher lows. Now, I've added a trend line here to determine the top of the range. You could argue that if a break of this trend line around $5 occurs, then yeah, we have a trend where, well, we have a range break that would not make the chart bullish necessarily, but it could lead to rising prices into Fibonacci resistance that we're going to take a look at now. For me, this chart is not very desirable because, first of all, to trade it on the long side, it's probably now too late unless you're a breakout trader. So you could always wait for a pullback if you like to get into a chart like this, yeah. Or it could be an interesting short trade from the resistance area, because for me, a chart that topped in 3 waves, I've just seen too many charts fail over the years, you know, that topped in 3 waves. And yes, so far only 3 waves down, but then just sideways. So this is not a typical bottoming structure. It can, however, lead to a corrective rally, and I assume we might be dealing with a B wave. And the way this is going now could be a C wave within wave B. So obviously the way to deal with this is to understand that after a 3-wave top, the market is likely heading down in 5 waves. Or it could turn into a massive triangle, which is also not very desirable, right? So if it comes down in 5 waves, then we have the potential that this has to be a diagonal. It's not impulsive on the way down. Looks like a diagonal. Also the size of this here seems to be a B wave. So the way to deal with this, in my opinion, is to understand that this could be an A wave. The move down was a B wave in the larger B wave. And potentially, price is probably moving in the C wave, but the B wave was likely a triangle. Probably was a triangle. Because then we can add the triangle wave count as well in the B wave. So here, A, B, C. A C wave is often very complex. Then likely, so then we could say either this is D and E and completed the B wave, right? Or it finished here and we have something like that. But it doesn't make, come on. This doesn't make a difference. So I assume the B wave unfolded as triangle and it's now rallying in a C wave. Again, that could move up quite a bit, yeah, but it doesn't need to because it's just a corrective rally. And it's just driven by hype, okay? So there are a few levels to watch. And it is the descending trend line. And it's the 50% retracement level at $7.21. The 61.8 retracement at $9.14. And the 78.6 fib level at $12.82. This is sort of the range that seems likely for a B wave. Now, doesn't mean it has to get there. It's not a bullish trend, okay? It's basically you correcting the move to the downside. That's at least how it seems like, taking context into account. Now, looking at the Fibonacci extension levels, there are also a few levels to watch because we can use the information we have to determine targets. This is only resistance up here. Now, how do we determine targets? Well, there are a few levels to watch based on the extension levels. The wave A and the wave C, they often have a relationship, fib relationship. Then we get the $6 level here as extension level. And then the 1.618 extension at $9.30, which is pretty much where the golden ratio sits anyway at $9.14. Yeah, these are levels to watch. And Again, it's the same process. If we see an impulse to the upside, okay, yeah, fine. Then we can always buy pullbacks, and price could eventually move higher long term. But at the moment, this is just a triangle, and it makes it unlikely to count this as a 1-2 setup, because a wave 2 cannot be a triangle. So it would rather suggest that this is some kind of a B wave within a larger B wave, which will then sell off again. But hey, this can still go higher short term. And as I said, it needs a miracle to repair this chart, which can always happen. I mean, it never broke the 78.6 fib level, so it's not all lost. But the only way typically how such a chart can be repaired is for it to develop a massive diagonal structure. And from an Elliott wave point of view, or structurally, these are much more choppy, much more difficult. I mean, this here is a major line of support, the 78.6 retracement level. It is important. You can see the market did respect it. So typically, I highlight a chart is turning long-term bearish if the lifetime 78.6 retracement level is broken to the downside. It never did that. So there is one way how this could protect or how this could develop into something much more bullish. Is just not very high probability at this stage. And that would be to count this here as, a wave 1, a wave 2, and then we would be moving up now in a diagonal. Again, also an A wave, a B wave, and a C wave. This would then be also a small wave 1, ABC down in a wave 2, ABC up in a wave 3. And that's how it could eventually form a first larger, it would be a 5-wave move, and then we can buy a pullback, and then at least you have a structure that would support a rally. At the moment, this is very, very uncertain and rather bearish, but certainly, I mean, they are just levels to watch. We need to see if we see a bearish reaction to these levels, but at the moment, not a long-term bullish outlook or prospect, very likely. Not when comparing it to many other charts, even though there are worse charts, or more bearish charts, because a lot of crypto charts that are really long-term bearish, they have broken below the 78.6 retracement level. Vulcan Forged hasn't done that, so I just want to stress that very clearly. So it's certainly, we can give it a chance to recover. It's just that, I can't primarily track that with the data I have. This just looks like a corrective rally for now. But you can always, if you fancy going long, you can always stop out below the last swing low. That's always possible. It's just that it seems a bit late for that now. Reward to risk isn't that favorable from here anymore. So it could be worth waiting for a pullback or actually looking for a short trade from up there. These are just ideas, based on the data we have now. That can of course change in a week. But this is sort of the assessment we have. But if those levels are broken, as I showed you, to the upside, above 1282, and if we see a 5-wave move to the upside, then very open to changing perspective on this chart. It still, though, would not become a high probability chart because it never created an impulse to the upside. That's the problem. That's my best assessment of PYR. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.